Hello and welcome to Pro Trader Strategies market commentary for Thursday, January the 26th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got a little bit of economic data today. Across the pond in Europe, we got the Italian retail sales came in at negative 0.7%, was expected to be a positive 0.1%. And then we also got preliminary GDP coming in a little bit higher than expected at 0.6% versus the expected 0.5%. And then here in the United States, we got a couple of numbers for ourselves. We got the initial unemployment claims came in at 259,000 versus the expected 247,000 claims. So that's higher than expected, meaning more people are looking for unemployment. Not that great for the economy. It could be a lot of those people coming off of the holiday seasonal hiring that now are looking for unemployment because of that seasonality being past us. So that pushing a little bit higher. We also saw preliminary wholesale inventories push it higher to 0.1% versus the expected 0.9%. Again, that preliminary wholesale inventories is a little bit off because it could be because we're seeing better PMI numbers, which is the Purchasing Managers Index, and they could be ramping up production, building inventories. That number on the inventories is a little bit hard to discern, especially when you should probably be looking at PMI numbers. But here in the United States, we got our flash services PMI, and it came in better than expected at 55.1 versus the expected 54.4. Anything above 50 is expansion in the economy, but keep in mind with our flash PMI numbers, it isn't as important as the ISM, which is the Institute for Supply Management Purchasing Managers Index. Then we also got new home sales coming in lower than expected at 536,000 units versus the expected 585,000 units. Now keep in mind, we also saw earlier on in the week the existing home sales was a lot lower than expected. Now we're seeing new home sales lower than expected. All of this probably due in part to the Fed increasing interest rates, and people are getting a little bit nervous about higher interest rates and are not out there really looking for homes. Also, another caveat to home sales is we usually see a seasonality to these, and that seasonality really comes in to the summer time for home sales. So to keep that in mind. And then later on today, we have the natural gas storage, whether or not it's expected to be a drawdown of 121 billion cubic feet. So we'll have to wait for that one. And then later on today, this evening actually, we get Japan's core CPI, and that comes out around 6:30 p.m. Eastern time. Then on to the overall markets. We've got crude oil right now pushing a little bit higher as we speak, and it's up about $1 on the day. And the thing to note is it is above this value area high as of right now. That was the line in the sand I've been talking about. It's going to act as resistance. The bulls are going to try and get above there. The bears are going to try and defend that level. So later on today, we're going to have to see how that pans out to see if they can actually stay above there, which would push to the bullish side. On to gold futures right now, down on the day, down $12 and below this 50-day moving average. So yesterday it came down, tested that, and rallied up. Couldn't get above that 9-day moving average, but today, out of the gates, the overall market just fell with pretty much the euphoria of yesterday's market rally in the equities across the board. Bonds continue to come off as they're down 11 ticks on the day, but yesterday basically sold off by 2 points and well below the 9-day moving average. The bearish trend in this is still intact, despite the fact that we did have this little bit of a bounce here. The bulls have lost control of the bonds as there is a flight to the equities with this historic move in the Dow Jones Industrial Average with its historic high yesterday. It's only up about 28 points on the day right now, but yesterday settled above that 20,000 level. If you're on Twitter, you could not get past seeing the 20,000 everywhere as you speak. It's, it is an arbitrary number, if you will. It's just a line in the sand that everybody likes to talk about. It was a difficult one to get through, but it was well above the 20,000 yesterday. Then on to the Nasdaq. The Nasdaq, showing a little kink in the armor of the overall equities after seeing all of that euphoria yesterday. That target has been hit. Now we're going to have to see if it can hold these levels. The Nasdaq right now unchanged, but as you can look at this little doji here, I don't know if it's at this point a breather for the bulls, just taking a breath, taking a little bit of time off. Yesterday's rally was on low volume, as you can see right there at the low end here. That was a big rally on low volume, which doesn't really solidify a big move or a lot of confidence in these levels. So today and tomorrow are going to be really instrumental in discerning whether or not this bull move here is going to be sustainable going forward. Now the Nasdaq up slightly on the day, but as you can see with that doji, it's not looking very good. Same with the EMini SPs. If you look at theirs, just slightly down on the day, but this doji is the thing to really kind of keep an eye on. That is a big signal when you get these pushes above that, there is a little bit of weakening going on there. And again, the lack of volume in this rally is a little discerning to me as well. But the EMini SPs slightly negative on the day. This is the breakdown of the EMini chart here on a 15-minute breakdown daily for the last 6 days, if you will. And you can see, this has been pretty much an unabated rally to the upside. I really think we're going to start seeing a little bit of longs covering, at least taking off some positions, thinning that out a little bit and protecting to the downside going forward. So the E-mini S&Ps, this is going to have to wait till tomorrow to really see whether or not this is a confirmation on being a top. Now with GLD, you saw GLD having a big down move to the other side. We also, with GLD, have seen a little bit of correction. I needed to add something in here just to take advantage of maybe a little bit of downside. If you remember at the beginning, actually at the end of last year, I gave my forward guidance for gold. I think gold is going to go down to 1,000, which would be equivalent to around 100 in the GLD. But I don't think that's going to happen right away, but I do think that it's going to go down here and want to test this value area low again rather soon, just as we've kind of topped out here. So I decided to put on a bearish put spread, which is a debit spread. If you look down here with the implied volatility, it's pretty low, so that is the time to kind of put on debit spreads. And I went into the March because it's a debit spread a little bit further out, and I bought the March 113 puts and then sold the March 110 puts to help finance some of that spread. I looked at buying just the 110 puts, but at the end of the day, if I do it as this put spread and get that target, it's a higher probability trade, and it would have been for about the same debit of $1.14. So I'm not going to wait to get my full maximum profit on that, but if the market goes down here and hits my 110 strike, that's probably when I'm going to look to cover that and take my credit then. So it's probably going to be close to 50% of my max profit if we get down there to test that area. So that's how I'm going to play that. If I can beat the probabilities, that's how I take advantage of that one. And then in FXE, I had on a strangle in there that I kind of forgot about. That trade I had on in the February and had sold the 98 puts and the 106 calls for 72 cents. Bought it back for 19 cents today. Kind of lost track of that one. It was actually a smaller trade that I put on, so I kind of was looking at the P&L on there and didn't really realize that it was I forgot that it was one of the smaller trades that I had put on. So that's about all I got for you guys today. Tomorrow's webinar is going to be on the long call butterfly. So check that out. I'm going to show you how to build that strategy to increase your probabilities of success. It does seem like a relatively easy strategy to build, but when you throw in my rules, it's not always going to fit every single stock. So I'm going to show you how to build that out to increase your probability of success and show you what all of my rules are around that in order to achieve that. All right, that's all I got for you guys today. If you can't take that, take it easy.